So, welcome, good people. We are going to discuss the December 2021 paper, and specifically question 2. Specifically, we are going to look at question 2 of the paper. This is December 2021. December 2021 sitting, FA. Section 1. So FA Financial Accounting, Section 1, December 2021, sitting. And we are looking at question 2 of that paper. So the question is on company accounts. You can see we are talking about ZAMU Limited. So the question is on company accounts. So ZAMU Limited has an authorized capital of 2 million ordinary shares of 20 shillings each. The company's total balance as at June 2021 is as follows. So we have the purchases and sales, basically the total balance, which runs all the way to balance at, sorry, the figures have not been captured. This is supposed to be 28,036. Sorry, 28,036. And this side also, we are supposed to have a balancing figure of 28,036. You can download the question, or you can have your own question just for follow-up. But the figures are balancing at 28,036, both debit and credit side. And then the inventory as of 30th June 2021 was valued at shillings 1.240. So this is okay. But this is 1,240,000. Then the freehold land was revalued at 9.4. Part of the revaluation amount was used for a rights issue of 1 shilling for every 4 shares held at a value of 20 shillings. Number 3, as at 30th June, insurance paid in advance amounted to 40, while salaries and wages outstanding amounted to 60. The directors proposed a dividend of 10% of the issued share capital under transfer for 20 to the general reserve. Corporation tax was that. Depreciation provided as follows: motor vehicle and furniture, and then allowance for doubtful debts as that. So we are required to prepare profit or loss statement for the end of 30th June 2021 and statement of financial position for the year 30th June 2021. 10 marks each. So let's dive into the question. ZAMU Limited, I keep on insisting, if you think you can't handle this additional information clearly, the best starting point is the additional information. So tackle all the additional information, very important. Factor in the additional information. For me, what I do is I read all of them and I internalize all of them. I know what is contained in the additional information before I begin the question. But the best you can do to avoid confusion, start with the additional information and then go back to this. Or read the additional information, understand, internalize. For example, I know there is something on allowance for doubtful debts. So anytime I deal with accounts receivable, this one will come in. I know there's depreciation of motor vehicle and furniture. I know there's a corporation tax. I know. And the other thing, you can jot them down somewhere. Then we have this something to do with the transfer. This is a general reserve. Of course, it will come on the appropriation account. Then we have insurance prepaid, and we have salaries and wages outstanding 60. Then there's something about revaluation. This is revaluation. It will come under comprehensive income statement. And then, of course, we have the closing stock. So those are things that you need to have them as you work on the question, or alternatively, do them somewhere to avoid cases of confusion. Okay, so let's begin. And of course, we always start with the heading. So this is ZAMU Limited, and we're talking about 30 June. So we'll say, come here and say ZAMU Limited, ZAMU Limited, and then we say financial statement, and this is for the period ended, or for the year ended. I'll say for the year ended 30th June 2021, like that. Make sure you underline. Then you have shillings 000, shillings 000, and shillings 000, like that. So then we start here. We start with the trading account. The trading account will always start with the sales, and you check around if we have any workings on sales. So 10,936. If we have workings, we'll have it in the inner column, so that the total will come at will feature at the outer column. So let's see. The common working for sales is sales returns. So we check around if we have any sales returns. Check if we have any sales returns, and since we don't have, we are right to put it on the outermost column. Then we go to cost of sales, and we start with the opening stock. Opening stock is already here. Inventory 1st July 2020, 840. So opening stock, we have it right there. So we come here and say cost of sales, and we have opening stock 840. Now cost of sales, you have to work it in the inner column. That one doesn't have any workings, so let's go to purchases. And purchases could have workings like carriage inward and returns outwards, or purchase returns. So purchases is 6560. Let's see if it has any workings. Carriage inwards or purchase returns, those are the two common ones. Carriage inwards, we don't have. So since we don't have, we'll just put that figure 6560 as it is here, 6560. If we'll be having any workings, we'll have worked them in the innermost column. Then we less what? The closing stock. We less the closing stock, and closing stock is 1.240. Remember, the closing stock is not a total balance item, 1.240. And again, remember, we are restricting the zeros, so don't put the zeros when we have chosen to restrict. So 840 plus 6560 minus 1240. That gives you 6160. So we'll have 6160 here. And then this is, so minus 10,936. That gives you 4776. 4776. This is our gross profit. Just like that. This is our gross profit. Just like that, and that is the starting point. Then we find out if we have any incomes and gains. Now that we are already in our profit and loss statement, find out if we have any incomes and gains. If we don't have, we go to less expenses and losses, and we'll be good to go. We'll have our net profit. It's as easy as that. I can already see we have investment income here. I have already spotted investment income here. So let's see if we have any other income. Trying to look for incomes and gains. Discount received, commission received, rent received, all those are. These accounts receivable is data, so that one is not, doesn't. So we'll simply say investment income. It's the only one we have, and it's 400 shillings. So we come here, we say investment income. Investment income. That is 400. Since it's the only one, we just put it there like that. Then we say expenses and losses. Expenses and losses. Now to do that, all these expenses and losses, we identify them and do that. So we have administrative expenses 320. Do we have any workings on administrative expenses? We don't have. So I'll simply come here and say administrative expenses 320. Administrative expenses 320. Then we go to the next one. Bad debts written off. These are it's a loss. Bad debts written off 86. So we simply come here and say bad debts written off 86. Bad debts written off 86. Then we come back. We have inventory, leave that one. Debenture interest paid is 140. Debenture interest paid is 140. There's something about these debentures that we need to know. Debenture, what was paid was 140, but for debentures, it's always good to calculate what is supposed to be paid. Like, come here, this is 12% debentures. So 12% debentures, what this means is that the rate at which they are supposed to pay this, to repay this debenture, debentures are long-term loans, is the interest is at the rate of 12%. So it's 12% of 12% per annum, that is, 12% of 2 million. This is 2,000 or 2 million because we've restricted the zeros. So that will give us 240. So if it is 240 and we've only paid 140, what does that tell you? That they have not paid 100 equivalent of interest. So if we are trying to capture the interest for that particular year, we will not go with what has been paid. We'll go with the right interest for that year that was charged. And the right interest is 12% debentures of 2,000, which is 240. So we'll come here and say debentures 240. Debentures 240. That is the right amount that was paid, that was supposed to be paid. And actually, debenture paid was, we can put it this way, paid is 140, and then outstanding accrued debenture will be 100, because we were supposed to pay, but we have not paid. So total will be 240. So just say 12% of 2,000. And out of this, we know 140 was paid, 100 is still outstanding, and that 100 that is outstanding will feature in our balance sheet. Okay, so let's continue. Investment income we are done. Investment balance sheet. Salaries and wages 1640. Do you have anything here on salaries and wages? Check, check, check. Yeah, salaries and wages outstanding is 60,000. So we have something on salaries and wages. So we'll come here, salaries and wages 1640 plus 60, which is outstanding. We get the correct return. Outstanding, we simply add salaries and wages. Since we have workings, we'll put it here, and then this is salaries and wages paid, but there is salaries and wages which is outstanding. Salaries and wages outstanding is outstanding. The figure is 60. So this gives us 1,700. That is the correct figure. What you have paid is 1640. What we have not yet paid is 60 from this additional information. It's 60,000, but remember we are restricting the zeros. So it's 60 plus that 1640 gets 1,700. Okay, so we go back here. Directors' emoluments to 40. Directors' emoluments. Do you have any workings on directors' emoluments? No. This is dividend. These are two different things. So directors' emoluments to 40. So we have it there. Directors' emoluments to 40. Emoluments 240. Then we come back here. Insurance 160. There's something on insurance. Insurance paid in advance is 40. So out of the 160, there is 140 that doesn't belong to this year. It was paid in advance. Paying in advance means it's for the following year. So we take what has been paid minus what doesn't belong to that year, which is 40. It belongs to the following year. So 160 minus 40. So we'll say insurance paid is 160. Insurance paid is 160. Then add prepaid insurance. Prepaid insurance is 40. Did they say 40? I'm not so sure of the figure. Let me just check to confirm. Insurance prepaid is, insurance prepaid is, paid in advance means prepaid is 40. So it means the insurance is 120. And I hope I've captured the insurance figure right, 160. Yeah. Cash at bank, motor vehicle at cost, freehold at cost, furniture and fittings at cost, accumulated depreciation. Okay, those are accumulated. I think we are done now. Let's come back to the additional information. Inventory, that one we used it. The freehold land was revalued, part of the revaluation, this will go to the comprehensive income statement. Insurance paid, that one we are done for now. The directors proposed, that is appropriation. Yeah, that is appropriation. Then the corporation tax for the year amounted to 540. That will also be appropriation account. Depreciation is to be provided as follows. Yeah, there we go. Motor vehicle 20% on cost. So we'll come here and say depreciation. Motor vehicle 20% on cost. So just 20% on cost, it means 20% of the value of motor vehicle. Not the net book value, which one? Motor vehicle at cost. So it will be 20% of 4.2, which will give us 20% gives us 840. Yeah, it's 840. So simply come here and say depreciation for motor vehicle. Let's add all the depreciations together, so we'll have them here. 840. And then the other depreciation is furniture and fittings. Furniture and fittings. The depreciation rate is 10% on reducing balance. Now, when you see 10% on reducing balance, it's 10% of the written down value. Written down value means the cost of that item, this one, freehold, no, furniture and fittings, minus the accumulated depreciation. So far, furniture and fittings, you can see accumulated depreciation. Furniture and fittings is 780, so it means you'll take 26 minus 780. That will give us, I think it's 1820 or something. 26 minus 780. Minus 780, that gives us 1820, yeah. So 1820, that is the written down value, because what they are trying to say here is that so far, this particular asset has depreciated by 780. It was bought at 26. It has depreciated up to 780, so its value is 1820. And they are saying that the depreciation is calculated on a reducing balance basis, which means we depreciate at that value as at that particular point in time. So it will be 10% of 1820. 10% of 1820. That should give us 182. And since I'm not seeing any other depreciation, then we stop at that. So this will give us, add the two depreciations, that should give us 840 plus 182. That should give us 1022. So you come here and say 1022. Good, like that. So we are good to go. Now, the next thing. What is the next thing? That is, we are good to go. I think we now go to the last item, which is this. Allowance for doubtful debts is to be maintained at 5% of the accounts receivable. So look at 5% of allowance for doubtful debts, 80. Did you include this? Allowance for doubtful debts we had not included because of the working. So allowance for doubtful debts is to be maintained at 5% of the accounts receivable. So 5% of accounts receivable. Where is accounts receivable? Accounts receivable. Here we go. 2,200. Accounts receivable is a debit account. So we'll pick this one, not this one. Accounts payable is this. Accounts receivable is this. So 5% of 22. Just calculate 0.05 times 22. That should give you 110. So 5%, 110. And then compare 110 and remember we already had allowance for doubtful debts of 80. So it's 110 minus 80. If there's an increase, that increase is debited. If it's a decrease, it's credited. A decrease is treated as an income. An increase is treated as a loss to the business. So losses are debited, and we are supposed to include them here. So we come here and say allowance for bad and doubtful debts. Increase. Actually, the key word here is increase in. Increase in. So it has increased by 30. It has increased by 30. So it's that 30 that we are going to include there. Do you have any other thing remaining? Any other thing that we have remaining here? Let's see if there's any other thing remaining. Any other thing remaining? Just trying to check around if we have anything remaining. So if we don't have anything remaining, let's get the total. Let's get the total. This is 320 plus 86 plus 240 plus 1700 plus 240 plus 120 plus 1022 plus 30. That gives us 3758. So 3758 here, 3758, get the total here. And since these are expenses and losses with less, so it will be 4776 plus 400 minus 3758. That gives us 1418. So 1418. This is our net profit. So net profit 1418. Now let's proceed. We are moving on well. Proceed. Oh, looks like I have run out of space. Looks like my board is I've run out of space. So let me just see if I can create more space here. Let me see if I can create more space here. Then I have managed to create more space here. Okay, unfortunately I've created space on top, so we'll just work with that. Let's just work with that. Let's just work with this. So this is the question. This is the first part of the question. Good enough, we are at the net profit level. So let's just finish this one up. So once we are at the net profit level, what we need to do is let's just pick it up from here. So our net profit is, pick it up from here, net profit. So our net profit is, the figure is, sorry, we have to get that figure down there. The figure is 1418. So we are picking it up from there. So the figure is 1418. Let's assume this is where our last column is, 1418. We are still working with the columns. You remember them? Shillings. So we are still working with them. And shillings, working with the same. So that's our net profit. So we go to the appropriation part, and appropriation part we are going to less the corporation tax. So the corporation tax, which has been clearly stipulated in the question. Corporation tax is at 540. So simply come here and say corporation tax 540. 540. That gives you how much? 1418 minus 540. That gives you 878. 878. And this is what we call profit after tax. Profit after tax. So let's see if there's anything else we need to do before paying the dividends. Of course, there's that part of paying the dividends. There is also the revaluation part of it. That is a comprehensive income statement. So let's see how it goes. And this is what we normally call the appropriation account. So we'll deal with this. Let's just add the comprehensive income statement. And under comprehensive income statement, the only thing that surfaces here is the freehold land, which was valued at 9.4. The freehold land valued at 9.4, Part of the revaluation amount was used as a rights issue of 1 shilling for every 4 shares held at. Okay, freehold land was valued at 9.4. What is the value of the freehold land? That's how we go about that. Just check the value of the freehold land and then compare with the revalued amount. The difference is an income that needs to be captured in the revaluation, in the appropriation account. So land and buildings, freehold land at cost is 6.4. So 6.4, and here it has been revalued at 9.4. So 9.4 and 6.4, the difference is 3,000. So we'll talk of revaluation reserve. Revaluation reserve. Revaluation reserve. 9,400 minus 6,400. This gives you 3,000. So we add the 3,000 here, we get 3.878. Sorry for that. This one is not supposed to be there. So 3.878. That becomes our total comprehensive income. Total comprehensive income. Total comprehensive income. 3878. So you less the corporation tax, then you add other comprehensive incomes, and the only comprehensive income we have here in this question of ours is revaluation reserve. Land was revalued from 6,494, giving us a 3,000 shillings difference. When you add, you get 3.878, and that marks the end of the first part. So we go to part 2. So our part 2 will be, this is what is this now? The statement of financial position as at that date. So we'll simply come here, get the heading. This is ZAMU Limited. Always start with the heading. So ZAMU Limited, financial statement of financial position, statement of financial position, financial position. Then we say as at, this is as at 30th June 2021. So you remember to underline, and then you have the 3 columns, like that. So then we start, and we always start with the non-current assets. So non-current assets. In our case, we have already established our non-current assets. We have they're actually just here on top here. So we have motor vehicle, freehold land, furniture and fittings. Motor vehicle, freehold land, furniture and fittings. We'll come here and say motor vehicle, freehold land, furniture and fittings, like that. So get the values, book values of each of them. The book value of motor vehicle is 4,200, freehold 64, and furniture 26. So 4264 and 26. 4264 and 26. Then you are supposed to get the depreciation figures for each of them. You are supposed to get the depreciation figures for each of them. So for motor vehicle, so far it had accumulated depreciation of the accumulated depreciation for motor vehicle is what? This is furniture and fittings motor vehicle. Let me just confirm from the first paper here. Motor vehicle is 1,600. So this was not captured well. So motor vehicle 1,600. That is the accumulated depreciation. Then furniture and fittings 780. That's okay. So 1,600. This is what had accumulated as at 1st July 2020. So we get the depreciation for this year that we are dealing with, which is 840. So that will be 840 plus 1600 will give us 2440. So we come here, we have 2440. 1600 plus 840, 2440. So then we take 4200 minus 2440. That gives us 1760. Then we go to freehold land and building 6.4. What had the accumulated depreciation was 780. You can see this is 780. Then you get the depreciation for this year. Depreciation for this year, just go back to the financial statement for that year. Furniture and fittings is 182. So it's 780 plus 182. 780 what had accumulated, 182 the current one. So 780 plus 182, that gives you 962. So we come here and say accumulated depreciation. Well, this is furniture and fitting, so it's 962. So 26 minus 962, that gives you 1638. So you have 1638 right there. Then for freehold land, remember it was revalued and there was actually 3,000 shillings gain. And so this will mean that the current value is 9.4 as opposed to the previous 6.4. So then, unless we have, I think we have another non-current asset, there must be an investment somewhere. So investment, because we had the investment income. So investment 1,800. So we'll pick that one. And since that one, the question is silent on it, no depreciation, we'll just have it like that. 1,800, no depreciation, 1,800. So get the totals of the non-current assets. This will be 1760 plus 94 plus 1638 plus 1800. That gives you 14,598. 14,598. Then we go to current assets. So let's get all the current assets. The current assets, of course, the first one that goes without saying is inventory, which you had in the additional information. I think it was 1240. Yeah, 1240. There we go. So inventory 1240. Let's have it there. Then we add inventory. We add what? Cash at bank 850. So we have cash at bank 850. Then accounts receivable. We have cash at bank, then accounts receivable. So cash at bank 850. Then we have accounts receivable. And for this accounts receivable, there's some working. Accounts receivable is 2.2. So we have 2.2 minus, it will be 2.2, 2,200 minus 110. Remember this 110 that we got 5% of this was to be, we were to provide a provision of 5% of the accounts receivable, which was 110. So we'll simply say 22 minus 110, and that will give us 2090. And then let's check if we have any other thing from the question. Check if we have any other thing from the question. Allowance. There was, I think there was, yeah, we have one. This is insurance paid in advance. That's it's a current asset. It's a prepaid prepayment. Prepaid insurance 40. I think that should be the last one. Yeah, so we'll work with that one. Yeah, that is the last one. So prepaid insurance 40. Prepaid insurance is 40. So that marks the end of the current assets. So we have 1240 plus 850 plus 2090 plus 40. This gives you 4220. So take that to the outermost column. Then we now have current liabilities. Current liabilities will start with the accounts payable, which has been captured in the question. Accounts payables here, there's no workings on it, so 640. That's 640. Then, of course, after accounts payable, we'll have the purchases and sales, bad debts, inventory, debenture interest. Yeah, debenture interest, there's outstanding debenture interest. Remember, the total interest was 240, but we only paid 140. So 100 is outstanding. So we'll come here and say outstanding debenture interest. Outstanding debenture interest. How much? 100 shillings. That is 240 minus 140. 240 minus 140. That was paid. Then we continue. There's something about salaries and wages. There was outstanding salaries and wages. Here you can see salaries and wages are outstanding amounted to 60. We'll come again here and say outstanding salaries and wages. These are liabilities because they are outstanding and we are supposed to pay and they belong to them. So outstanding salaries and wages. Salaries and wages to the current financial year. So this is 60. And then we move on. Directors' emoluments, insurance, cash at bank, motor vehicle. I think we've taken care of all that. 12% debentures, accounts payable. Okay. So what else remaining? Okay, we have corporation tax for the year, 540. Then we have proposed dividends, of course. Item 4, item 5, these are items that will need to be discussed here. So let's pick this one, which is direct first. Corporation tax, 540. That's a provision. It's a provision, that is money that has been set aside for taxes. So it becomes a current liability. Provision for corporation tax, 540. 540. Then we'll have now item 4. The directors proposed a dividend of 10% on the issued share capital and a transfer of 420 to the general reserve. So 420,000 was transferred to the general reserve. But before that, the directors proposed a dividend of 10% of the issued share capital. So 10% of the issued share capital, ordinary share capital is 8,000. 10% of 8,000 is 800. The directors propose a dividend of 10% of the issued share capital, which is ordinary share capital 8,000. Yeah, so we'll talk of the authorized share capital is 2 million, but we cannot work with that. We work with this, the ordinary share capital, which is already there. So it's 10% of 8,000. Which will give us 800. So provision for this is a dividend. So 10% of 8,000, that gives us 800. So unless if we have something else, but just check to confirm. So if we don't have anything else, we add all of these current liabilities. That is 740 plus 60 plus 540 plus 800. This gives us 2140. So 2140. And then we take now the non-current assets total, 14,598 plus 4220 minus 2140. That gives us 16,678. 16,678. And this should be a balancing figure. So net capital employed. So this is our net capital employed at 16,678. So let's find out the other part, financed by section. So what has financed this money? And that should be able to balance this figure. To balance it, to agree with the figure. So the finance by section, Let's look at how this was financed. So number one, definitely it was financed by ordinary share capital. Ordinary share capital. And ordinary share capital, we have the 8,000 ordinary share capital. But there was something on additional information for ordinary share capital. The freehold land was revalued at 9.4. Part of the revaluation amount was used for a rights issue of 1 shilling for every 4 shares held at the value of 20 shillings. Part of the revaluation amount, now we know the revaluation amount was 3,000. So part of it was used for a rights issue of 1 shilling for every 4 shares held. So how many shares were held? We have 8,000 shares that were held. 8,000 shares which were held. So for every 4 shares, there was one share was a rights issue of 1 share. So that means how many rights issue shares were done. This is 8,000 divided by 4. This is 2,000. So it means we issued a rights issue of 2,000 shares, and each share was going for 20 shillings. The freehold land was okay, that part leave it. Part of the revaluation amount was used for a rights issue of 1 for every 4 shares. So for every 4 shares held, we were given 1 rights issue. So how many rights issue were given? 2,000. So then in that case, we'll come here and say 2,000 ordinary share capital 8,000. So it will be 8,000 plus the 2,000. So that now we have 10,000 as opposed to 8,000. Because a rights issue will become part of the ordinary shares after it has been issued. So that will be 8,000 plus 2,000, so we'll have 10,000. So ordinary share capital 10,000, like that. Then we check again if we have any other source. Let's go back to the question. Debenture interest rate. Of course, there is debenture. So we have debenture. Then we have investment directors. We have so we have general reserve. 1st July we had 2,100. 1st July we had 2,100. So general reserve. And this is 1st July 2020. And then in 2021, there was an additional, let's look at additional information number 4. Yes, the issued share capital and transfer for 20,000 to the general reserve. So in 2021, we transferred 420,000. 2020, we had 2.1, then in 2021, 420. So it's 2.1 plus 420, that gives us 2520. So I'll simply come here and say general reserve. Now that will be 2,100 for 2020 plus 420 that was transferred in 2021. This gives us 2520. Then now we 2520. Then you have, of course, you have the 12% debenture. You have the 12% debenture. That was an current asset. We'll come back to that. We have revenue reserve. This is 1st July 2020. So let's look at revenue reserve. That's the next item. So revenue reserve. This is 1,500 for 2020. So what is the revenue reserve for this year? That one calls for a simple calculation. So let's just do some minor calculation here. The revenue reserve. So for revenue reserve, we'll pick up the figures from the appropriation account. and our appropriation account is right here on top. So go to the appropriation account. The net profit after tax was 878. Net profit after tax. Net profit after tax was 878. And then we'll proceed from there. So we have transferred to general reserve. General reserve. How much was transferred? 420. So how much do we remain with? This is 458. And this transfer is found on our notes. Additional information number 4, where a transfer of 420,000 was done. So we less 420 from the net profit after tax. Remember, it was net profit, then we deducted the corporation tax, then we are now lessing the general reserve, amount that was transferred to the general reserve. We have 458. Then it is this 458 that we are supposed to add revenues from the previous year, or retained earnings. That was 1500. So how much do we have? 1958. And then now we less the dividends, the proposed dividend for that particular year. And we had calculated it was 10% of the 8,000, which is 800. 800. So this leaves us with 1158. 1158 is the new revenue reserve. 1158 becomes the new revenue reserve. So revenue reserve 2021, revenue reserve 2021 will be 1158. So we come here, revenue reserve, we just indicate 1158 as computed. 1158 like that. Okay, let's look for any other item that could help us here. After revenue reserve, do you have any other item? So we have again we have an item here before we forget this one. The revaluation was 9.4. We had the revaluation amount of part of the revaluation amount. The revaluation income was 3,000, but only 2,000 was used to issue the rights for the rights issue. 2,000 was used. So we have 3,000 minus 2,000 that was used. 3,000, that was the revaluation. If you can check on your balance sheet, we had it there. The revaluation is 3,000. That is 9,4 minus 6,4, we have 3,000. And then only 2,000 shillings equivalent of an amount was used for rights issue. So we still have 1,000 pending, and that 1,000 will come here as a revaluation reserve. Revaluation reserve. We had 3,000, but we only used 2,000 for rights issue. So we still have 1,000 with us. So this gives us, get the total of this, and then we have the long-term liabilities or non-current liabilities. Let's follow the notes like that. The non-current liabilities. Non-current liability, which we have, in this case, it's the 12% debenture. 12% debenture, and the 12% debenture was, I think, 2,000. Just confirm the figure. 12% debenture is 12% debenture, or is it 2,000? 12% debenture is 2,000. We come here to the 2,000. So that is it. We can get the total here. The total here, because this one 12% debenture is just the only one. There's no need of putting it in the inner column. Just straight to the outer column, 2,000. But let's get the total here. This will give us 10,000 plus 2520. That is 12,520 plus 2158. 12,520 plus 2158. That gives us 14,678. 14,670. 14,678 plus 2,000. That gives us 16,678 and that marks the end of the question. This is net capital employed. Net capital employed. So you can see net capital employed and net capital employed, all of them are balancing at 16,678. So this should be able to give you the 20 marks. 10 marks for the financial statement, 10 marks for the financial statement of financial position as at 30th June 2021. That is the question. That's how you should go about doing that question. This question should take you less than 30 minutes. So you have to work on accuracy, your accuracy levels and the speed. Thank you. Subscribe. Let's meet in the next question.